Hey everyone, and welcome back to the channel. Today, we're diving into a topic that can send a shiver down the spine of any business owner or self-employed individual, an HMRC inquiry. It's that dreaded brown envelope landing on your doormat. But what if I told you that many of these inquiries are triggered by common and often avoidable red flags? By understanding what HMRC looks for, you can significantly reduce your chances of being selected for an investigation. So, in this video, we're going to break down the 5 most common red flags that attract HMRC's attention, and more importantly, give you practical tips on how to avoid them. Stick around, because this information could save you a ton of stress, time, and money. Let's get started. The first major red flag is big fluctuations in your turnover or profit. Imagine this. One year your business declares a profit of £20,000, and the next year it jumps to £200,000. Or perhaps it goes the other way, and your reported income suddenly plummets. While business growth is fantastic, and downturns are a reality, large, unexplained swings are a huge signal to HMRC. Their systems are designed to spot anomalies, and a sudden, dramatic change in your figures screams, "Look at me." They'll want to know why. Is it genuine business growth, or is income being hidden? Did a major contract end, or are expenses being inflated? The key here is being prepared to explain these changes. If you've had a breakthrough year, great. Just make sure your records, like contracts and invoices, back it up. If you've had a tough year, document the reasons why. Consistent, steady figures are less likely to raise an eyebrow, but when big changes happen, robust record keeping is your best defense. Always have the story behind your numbers ready to go. Next up, red flag number 2, consistently filing your tax returns late. This might seem like a simple administrative slip-up, but to HMRC it can suggest a few things, none of them good. Firstly, it hints at disorganisation. If you can't manage to file on time, they might wonder how well you're managing your financial records in general. Are your books a mess? Are you likely to have made errors? Secondly, chronic lateness can be interpreted as a sign that you're struggling with cash flow and are trying to delay paying your tax bill. This automatically puts you on their radar. The penalties for late filing are just the start. The real risk is the increased scrutiny it brings. The solution is straightforward. Get organised. Set calendar reminders well in advance of the deadline. If you use an accountant, get your information to them with plenty of time to spare. Don't leave it until the last week of January. Filing your tax return on time, every time, is one of the easiest ways to stay out of the spotlight. It sends a clear message that you are diligent, organised, and on top of your financial affairs. The third red flag we need to talk about is having high expenses relative to your income. Every business has costs, and claiming for legitimate business expenses is a crucial way to reduce your tax bill. However, if your expenses seem disproportionately high for your industry or turnover, it's a major cause for concern for HMRC. For example, if you're a freelance writer working from home and you're claiming thousands of pounds in travel and vehicle costs, that's going to look suspicious. HMRC has a vast amount of data on typical expense ratios for different trades and professions. If your claims fall well outside these norms, their algorithms will flag your return for a closer look. They'll want to see proof that every single expense was wholly and exclusively for business purposes. This is where keeping meticulous records is non-negotiable. Don't just keep the receipt. Make a note on it explaining what the expense was for. Use a business bank account for all business transactions to create a clean audit trail. Be realistic and honest with your claims. Trying to sneak in personal costs as business expenses is one of the quickest ways to trigger a full-blown investigation. Moving on to our fourth red flag, and it's a big one for small businesses and sole traders: directors' loan accounts that are constantly overdrawn. A director's loan is when you, as a director, take money from your company that isn't a salary, dividend, or expense repayment. In simple terms, you're borrowing from your business. Occasional short-term borrowing that's repaid quickly is usually fine, but if your loan account is persistently overdrawn, especially for large amounts and for long periods, HMRC gets very interested. They see this as a way of extracting funds from the company tax-free, avoiding income tax and national insurance. There are specific tax rules, known as the S455 charge, that apply to loans that aren't repaid within 9 months of the company's year end. Failing to declare this and pay the associated tax is a huge red flag. The best way to avoid this is to maintain a clear distinction between your personal and company finances. If you do need to borrow from your company, make sure it's properly documented and have a clear repayment plan in place. Regular paper dividends to clear the loan account can also be a valid strategy, but you must ensure the company has sufficient post-tax profits to legally declare them. Always get advice from your accountant on this. And finally, the fifth red flag is making errors or frequent amendments to your tax return. Everyone makes mistakes. Maybe you typed a number wrong or forgot to include a small source of income. Filing an amendment to correct an honest error is the right thing to do. However, a pattern of mistakes or submitting multiple amendments for the same return can signal carelessness, or in a worse light, that you're testing the waters to see what you can get away with. HMRC's Connect system is a powerful piece of software that cross-references data from a huge range of sources: banks, letting agents, government agencies, and even online marketplaces. If the information you declare doesn't match the information they have from third parties, it's an immediate flag. For example, if you forget to declare interest from a savings account, their system will likely know about it. The best way to avoid this is through diligence. Double-check and even triple-check all your figures before you hit submit. Use accounting software to reduce the chance of manual errors, and if you're not confident, hire a professional. An accountant's fee is often a small price to pay for the peace of mind that comes with knowing your return is accurate and compliant, dramatically lowering your risk of an inquiry. So let's quickly recap the 5 red flags. 1. Large fluctuations in your income or profits. 2. Consistently filing your tax returns late. 3. Unusually high expenses for your business type. 4. Overdrawn directors' loan accounts. And 5. Careless errors and frequent amendments to your returns. As you can see, the common thread running through all the avoidance strategies is simple. Be organised, be honest, and be diligent. Keeping clean, accurate, and detailed records is your absolute best defence. It's not about being scared of HMRC, it's about being professional in how you manage your finances. By proactively avoiding these red flags, you're not just reducing your risk of an inquiry, you're also building a healthier, more transparent, and ultimately more successful business. You're taking control of your financial narrative and ensuring that if HMRC ever does come knocking, you'll be able to confidently show them that everything is in perfect order. It's all about preparation and good practice. I hope this breakdown has been helpful and has given you some clarity on what HMRC looks for. Remember, this isn't about finding loopholes, it's about solid, fundamental good business practice. Taking these steps will give you peace of mind and let you focus on what you do best, running your business. If you found this video useful, please give it a thumbs up. It really helps the channel. And for more practical tips on business finance and tax, make sure you subscribe and hit that notification bell so you don't miss our future videos. If you have any questions or have your own experiences with HMRC you'd like to share, drop a comment below. I always love hearing from you. Thanks for watching, and I'll see you in the next one.